and welcome to Mint. This is Malvika Joshi, and in this edition of From the Newsroom, we are joined by Dinesh Unnikrishnan. Hi Dinesh.
Hello.
Welcome to the show. The Indian banking sector has been facing tremendous pressure due to a lot of cases being referred to the corporate debt restructuring cell. The amount of loans restructured by Indian banks has crossed over $1.6 trillion. Dinesh will tell us more about the banking sector scenario. So Dinesh, tell us, what does this mean? Like, the number of cases or the loans which are being restructured have significantly risen. So what is the reason for this and what does it mean?
Yes, Malvika, you are absolutely right. You have said it. The picture is very clear. There has been a very sharp rise in the number of restructured loan cases. As you said, the amount has already touched close to 1.7 trillion. And one must remember this was just 1.5 trillion in March, which means in just 3 months, around close to 20,000 crore worth loans have been restructured.
Yeah.
Means, those many companies have gone under stress and have to approach banks. We all know that a bank does restructure the loan of a borrower only as the last option. Otherwise, the only remaining option is to leave it as an NPA, as a non-performing asset.
Yeah.
So by restructuring, they probably give more time for the company to repay or cut down the interest rates or give a payment holiday or something.
Right. So what are the analysts saying, like, what can we expect in the coming quarters?
We need to see what is the reason for such a large number of cases being referred to the CDR cell. CDR is only the corporate debt restructuring channel. Banks also do, on a bilateral basis with companies. That means the actual figure of restructured assets may be quite higher. And we all know the reason because of this economic slowdown. The ability of individuals and corporations to repay the loans to these banks have, significantly been impacted over the last few years. That is the reason. Now, looking ahead, it looks pretty bad from now on, given that there is no significant pickup in the economic activities, as we have seen in the GDP numbers. It was some GDP grew 5.3 in the last quarter. It was the lowest in 9 years. Now this quarter it's been just around 5.5.
Yeah.
So analysts and experts are not very optimistic that there will be a significant improvement in this restructured loan cases, this scenario, unless there is a real pickup in economic activities, which is at least a year from now. Yeah.
So RBI has also shown a lot of concern because of increasing bad loans. What could be the impact, like, are the banks hesitant? How could this really impact certain sectors, if you could?
Malvika, banks are not really left with any choice, as I said earlier, because restructuring is somewhat a last option for them. Otherwise, just classify this as an NPA. So this is the last option.
Yeah.
So already a significant chunk of these restructured assets have gone bad, and banks have fully provided, and this has already impacted the profitability of the sector.
Yeah.
Now, what analysts are telling us is approximately 25 to 30% of the total restructured loans are again likely to go bad. If you take the case of State Bank of India, which has restructured around 33,000 crore, almost 7,000 crore has already turned NPA. And what SBI people telling us is that they may go for another 5,000 crore restructuring in the remaining part of the year, which will take to close to 40,000 crore. It's just one case, so the picture is not very promising.
Thanks a lot, Dinesh, for explaining. The government is announcing several reforms as remedial measures to bring the economy back on track. However, the impact of these reforms will play out with a lag. We will have to wait and watch how fast the banking sector is able to wade through its troubles. For more updates, log on to livemint.com.